Retail inflation is the increase in the prices of goods and services that consumers buy. It is measured by the Consumer Price Index (CPI), which tracks the changes in the prices of a basket of items over time. Retail inflation affects the purchasing power of consumers and their standard of living. According to Crisil, a rating agency, India's retail inflation is expected to moderate this fiscal year, FY23, due to easing food inflation and high base effect. Food inflation is the increase in the prices of food items, which account for nearly half of the CPI basket. High base effect means that the inflation rate in the current period is lower than the inflation rate in the same period of the previous year. Crisil expects CPI inflation to average at 5% in FY23, compared to 5.5% in FY22 and 6.2% in FY. One of the main reasons for this moderation is the easing of food inflation, especially vegetable prices, which have been volatile and subject to unseasonal rains and supply disruptions. Vegetable prices declined by 10.4% in December 2022, helping cool down overall retail inflation to 4.6%, the lowest in 19 months. Crisil expects food inflation to remain benign in FY23 as supply improves and demand remains subdued due to the pandemic. Another reason for lower retail inflation is the high base effect, which will kick in from April 2023 onwards. This is because retail inflation was very high in April-June 2022, averaging at 7.2%, due to the lockdowns and supply shocks caused by the second wave of COVID. As a result, the inflation rate in April-June 2023 will be lower than the same period of FY22, even if there is no change in the prices. However, Crisil also warns that there are some downside risks to its inflation forecast. These include unpredictable movements in food prices, especially vegetables, pass-through of input cost increases to retail prices as demand recovers, rise in household inflation expectations, and supply disruptions due to COVID-19 waves or geopolitical tensions. Therefore, retail inflation may not settle at the RBI's target rate of 4% for a sustained period. Retail inflation is an important indicator of the health of the economy and the welfare of the consumers. It also influences the monetary policy decisions of the RBI, which aims to balance growth and price stability. A moderate and stable retail inflation can help boost consumer confidence and spending, and support economic recovery.